All right, hey, what's going on? This is Dan Keller, your mortgage advisor at New American Funding. Today is Saturday, January 28th. I'm down here in beautiful Puyallup, Washington, taking a break. Actually, I'm joking. This is Puyallup, Washington's not that beautiful, but I am down here in Puyallup taking a break. I'm at my daughter's volleyball tournament, and I wanted to record this for you because this is some very important information. I send this video update out to my past clients and a lot of real estate professionals and financial planners that I work with, and so this is an important message. This is kind of, a lot of people lean on me for my advice or my take on this, and so I'm going to give you my 2 cents. I want to talk about 2017's market forecast, and I want to talk with you about, I don't want to make any bold predictions, but I've had a chance to talk to some very, very smart people and economists, some people that I follow in the mortgage industry, and this is kind of my 2 cents, and this is kind of what I'm sticking to, and it's based off facts. So you're going to see this arrow right here. This arrow, on the last 2 episodes ago, I said, hey, don't listen to anything in the media right now. Rates are not increasing. They're not going through the roof. Actually, they've corrected to about 50% of when the market crashed after Trump's election. Rates went up literally a full percentage point. And this range, these two red bars right here, represents the range where we've come about the halfway point to recouping all of our losses, about 50% there, right there. So I zoomed in on the market, so you can see we're darn close to that. We're about 40 to 50 basis points, and that's not too big of a gap away from meeting that halfway point there. What that means is it means rates at about 4.125, 30-year fixed with no points. I'm not making any rate quotes here, but it basically means that 30-year fixed are going to be in the low fours. Let's talk a little bit more about this and what this means, but in a second. But what I want to talk about is kind of what the market's doing right now. We just saw a GDP report come out. That's the gross domestic product report. It's one of the number one indicators, leading indicators of the strength of our economy, and it came in low. It's not where it needs to be right now. It's actually very low and it's weak. So that's something to watch. Oil's kind of up. That's good. There's a couple of things right now that I really want you to pay close attention to. Obviously, the Dow. A lot of people that I follow are calling it like Dowphoria, Trumpphoria. There's a lot built into the Dow right now in regards to speculating that Trump is going to make good on a lot of his promises, economically speaking. And so remember this, the market is super impatient. So right now, Trump is making good on a lot of his promises. He's taking action. So the Dow and the markets like that. If that cools off, if that cools down, maybe keep your eye on a reversal or things settling down a little with the euphoria going on right now with the market. So I want you to pay close attention to that. That's kind of an explanation as to why the Dow and why everything is going so crazy right now. Trump's putting his money where his mouth is in his first couple of weeks in his presidency. So let's talk about what exactly does this mean. So basically, I took a 760 credit score with approximately 20% down, and I've put together kind of some current active rate quotes so you can see where a 20% down conventional purchase, and all of these quotes include only 0.50, so a half a point in discount points, okay? That's it. So it's a pretty competitive quote. These are the rates right now. So if you go back here, I just want to show you this, where this chart right here, where we're at in this 50% halfway point trading range, if you really want to get nerd out and pay attention about the 103 mark, this is where rates are at right now. 20% down conventional loan, you're at 4.375. That's not bad. If you look at an FHA loan with 3.5% down, you're at 3.875 on a 30-year fix. The VA was 0 down, 3.875 on a 30-year fix. So guys, listen up. Rates are not that bad. If we stayed right here, which I believe we're going to stay right here in this range for 2017, it's a pretty darn good range, okay? Obviously, watch the Dow. Pay close attention to Trump and taking care of a lot of the promises that he made with the economy. As you start to see that move up, we probably will see some rates increase a little. But I think that 4.3 to 4.5 or 4.6 range is what we'll probably see for 2017, So one of the last things I kind of wanted to talk about was I'm getting a lot of calls and questions about net monthly payment, rent versus own. So that's why I created this right here. If you were paying $2,100 a month in rent, compared to this analysis, this is a $425,000 purchase. Look at the net payment. It's actually less expensive to purchase than it is to rent at $425,000 in this market. Basically, I'm sharing this with you to explain home affordability. This is really good info. This is great info to share. One last thing I want to share with you. This last month, I had an opportunity with my coach to really dial in my mission and my vision statement for my company. I just wanted to share this with you. I want to get this out so people can kind of see what I'm all about. And so that when you do think of me and you recommend me to your friends and your family members and your coworkers, this is what the Dan Keller team is all about. I'm a purpose-driven mortgage team that's centered around three big things. One, an unbelievable mortgage consultation. Two, tons of follow-up and proactive communication. And then three, a high level of service. Our mission is to help our clients understand the importance of attaining a very comfortable mortgage payment, get this, so that they are able to save money for retirement and retire well off. Our purpose is to turn our clients into advocates by providing a world-class experience before, during, and after funding your home loan. So I wanted to share this with you. Guys, if you need anything, reach out to me. I want to be a resource to you. I'm sorry this video took a little bit longer, but this is my forecast. Good information. Please share this and let me know if you have any questions, okay? Take care.